Hello traders, Rich here, and here's a quick but detailed update on NZDUSD. As usual, if you like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, NZDUSD has been overall bullish, making higher lows and higher highs trading inside this flat rising channel. And if you remember from my previous analysis, picture and video analysis, we have been trading the range upper and downward. We can see it better on M30 time frame. So previously the bears took over after forming this head and shoulders and activating the sell, and then the buy here, ascending triangle, channel, and so on. So lately we have been looking for these buy setups, and now since we are around the upper bound, we'll be looking for sell setups and we'll be applying the same previous logic. So we'll be waiting for the bears to take over by breaking below this previous low. Of course, when the sell is activated, the stop loss would be above the previous swing high and we target a 1 to 2 reward ratio, which would be around the lower bound of this channel. Of course, we'll be looking for sell setups unless we break this zone upward from H4 in an aggressive manner. In this case, we'll be expecting continuation to the upside because we will get this inverse head and shoulders getting activated and we'll be expecting further bullish movement. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is a no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, CADJPY has been stuck inside the range between our lower support and blue resistance, and it's also in the shape of a falling flat channel, and we are currently approaching the upper band, which is a massive zone intersection of a resistance, upper trend line acting as a non-horizontal resistance, and this supply zone as we had an aggressive movement down from. That's why we'll be looking for trend following sell setups on lower time frames. If you zoom into M30 time frame, we can see that we have been bullish after breaking above this high, and CAD has been making higher lows and higher highs, and we are lately stuck inside this rising range. So we are still bullish, of course, but we are looking for sell setups because we're around a supply zone from daily time frame. For the bears to take over in this particular case, we need to see a break below the previous major low, which is also the last swing sitting around the lower trend line. As per my trading plan, I'll be waiting for this break. Once we have this break, we can go for a short position for a sell. The stop is above the previous swing high, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective. Of course, meanwhile, until the sellers take over, CAD would be overall bullish and we can still trade higher, form new lows around the trend line before breaking it downward. In this case, I'll be updating my zone to be this one. That's it for CAD. Best of luck, and I'll see you hopefully on the next one.